I'm Varushka Singh, RMB Research's FX and FI strategist. Today I have with me my colleague, macroeconomist Siobhan Redford. We are going to be discussing the SARB's decision today to cut by 50 bips to 3.75%. Siobhan, it's good to catch up. Please tell me more about the statement and the reasoning behind the SARB's decision.
So the SARB didn't catch the markets unaware. Most analysts were expecting a cut of 50 basis points. We thought that they would continue being quite bold and cut by 100 basis points, based on the fact that we thought that they would revise their growth outlook to be much worse than it had been in April. We have actually just changed our growth outlook from a contraction of 6.2% to a contraction of 8.2%. However, the SARB were not quite as drastic and only cut the growth projection from minus 6.1% to minus 7%. They also only marginally revised their inflation outlook lower, and this is what led to a 50 basis point cut.
Was there a split in their decision? Was it unanimous? Was there a split with the MPC?
There was a split, and to be honest, it was actually quite a hawkish and surprising split, in that it seems like the split was between a cut of 25 basis points or a cut of 50 basis points. So our so-called hawks, which seem to have re-emerged, preferred a cut of 25 basis points. That would be two of the members, with three of them preferring a cut of 50 basis points, which was then enacted.
That makes a lot of sense, because if we look at the market's reactions, the rand started around the 1790 mark today, and after the statement tended to strengthen. However, it has moved to weaker levels of 1760 the last I checked, around 4 o'clock or so. But with regards to the R2030, if I have to look at the bonds, it did strengthen on the back of the news, and we saw swap rates as well as the FRA rates pick up a bit as well relative to their close yesterday. So that hawkish statement that you speak to is coming through. Tell me more about where to from here. So we know more or less a hawkish cut, and you've spoken a bit about the QPM and a very scary number with regards to the growth. So from these anecdotes, tell me more or less your overview of where we see the next decision come in for the SARB, which should be July, and just your take on where to from here.
So we're calling for another 50 basis points cut. This is based on the fact that we have a current projection for growth, which is quite a bit worse, over a percentage point worse than the SARB's projection for growth, and also quite a bit lower expectation for inflation. We think that weak demand is going to contribute to inflation remaining below the 3% lower bound of the inflation target for the next 3 quarters, whereas the SARB is only seeing this for the next 2 quarters. So if data comes out and shows this, then the SARB is going to be pushed to provide further accommodation to the economy. And therein lies the rub. It's a lack of data availability at a time when we need data so desperately to understand what is going on in such a dynamic situation. So they are choosing to be a little bit cautious in the face of a lack of information, as we see a number of statistical releases have been delayed as a result of South Africa's lockdown.
That makes a lot of sense, Siobhan. I mean, these are unprecedented times, and in the absence of data, it makes the SARB's job a little more difficult than what they are already doing. I mean, they have provided quite a bit of accommodation so far this year, so I think I tend to agree with your views. Is there any other anecdotes that you think you should share with the audience?
I think it's important to bear in mind that the SARB is not only providing support to the economy through interest rate decisions. Unlike the global financial crisis, where it was largely seen to be a monetary policy only institution, a number of countries have learned from this. And so we have seen the SARB providing liquidity to the market at a time where there was a lack of liquidity in our FI market. And we've also seen financial stability type relaxations being made to help the banking sector as well as consumers. So the SARB's overall contribution to the economy is quite a lot broader than just interest rates.